Hi guys, welcome back. Welcome back to another little installment today. And today we're going to be talking about the scalping strategy that I was talking about to you guys earlier. Okay, so this is something that you guys have requested, and I'm just showing you how you can use it and why it works. So today we're going to be talking about what it is, and it's more or less just a variation of the OTE setup, guys, that you already know and you already use. But I'm going to show you how to use it and how it can kind of like supercharge your results and really minimize the risk that you're taking on every trade as well, and minimize your losses too. So yeah, and guys, like, I want to just make this really clear. Like, you can use this strategy on virtually any time frame, but I think it's most effective on the intraday time, or the intraday like time frames, right? So your 15-minute, 5-minute, hourly time frames, right? And I'm saying this just because I think this strategy is more of a scalping strategy. Like, as much as the framework for it is universally applicable, I would say it's better to use this on intraday, because you get way more setups and they're way more consistent, and you can really grow and build your account using this strategy. And I literally know a friend that literally uses this like every day, and he's built his account up extremely quickly just using this strategy on a 50-minute time frame on Fiverr actually as well, and it works extremely well. So yeah, let's just go over it, guys. So more or less what this is that it is all it really is it is just an OTE setup. Now we're going to be doing a bit of drawing here, because I haven't got a whiteboard, I'm going to have to do it, right? So as you guys know, with your OTE strategy, right, it's more or less like, this is more or less what you're looking for, okay? So usually it will tend to be a pullback and then a retracement back into the range or the defined range that you previously had. So more or less like this, right? So you have a structure high right here, and you have your structure low right there. And what is going on now is more or less a pullback inside of this range right here. So, if we were targeting this with longs, we would be targeting more or less like this area here. So we would be looking for blocks. You got one there, and we got a block right in the sweet spot right there too, which lines up with the 50 levels too. So you'd be using you'll be using this as a range, right? So let's say you're using this as a range, guys. The reason why this technique works so well is because you're not, when you're usually doing an OTE setup, guys, you're usually looking for an equal measure move to the downside or to the upside. So you want to see price retrace, and then you want to see the exact same price leg down past that structure low that that you have marked out on your charts. Now, the reason why this works, guys, is because essentially what I'm going to be showing you is this strategy is literally just, you want to, instead of targeting that whole range, you want to target half of it. Okay, and I know you're going to be like, why am I targeting half of this? Like, it's less money, less thing. Guys, 100% I agree. Like, the way I've taught you is that I want you just to target the structure lows, and we target structure highs for liquidity, right? And that is how the market works. It usually just, goes in equal measure moves to target liquidity and stop people at the market, right? We know all that jazz. However, when you're using this strategy, guys, you can use this strategy to literally trade bounces in price. And this is going to allow you to have a lot more frequency in certain trades. And it's also going to allow you to have a much higher strike rate too, purely just because you're going for much smaller reward, right? So let's just show you what I mean on this. So essentially, this works extremely well when you don't really know the order flow of the day, and you're just trying to capitalize on price action, really, and price legs. So guys, let's say we're looking for this strategy today. We're looking for this strategy in price today. Today we had actually a really good setup, and more or less what it was is that we had an OTE setup. All right, so let's say you wanted to go along, and guys, like, this is a pretty good reason to go along anyway, because price did actually run a structure low, and we know that there's a lot of liquidity underlying in this void right here. So I would say, I would have pretty long this today if I was trading NFP week, up until that block there, just because we have a void and we have a block right there, right? So I would have had that as my target initially anyway. However, this strategy you don't even need to even worry about this kind of stuff. So what it allows you to do is it allows you to have a target inside of the range. So essentially what you're doing, guys, is you're trading inside of the defined range, and your targets are also inside of the range. And this allows you to have a much higher strike rate because you're not worrying about price, expanding above a previous structure high or a previous structure low. All you really care about is you want to just trade like the price bounces inside of a given range, right? And essentially what you're doing, guys, is more or less, so let's say you took this trade today. Let's say you took this trade long and you're saying, okay, great, like price is broken that structure high there and it's retracing, I want to go long. Now, essentially what this allows you to do is it allows you to go long and get out. So get in and get out before price even takes out that structure high. So what you're doing is you're basically targeting I think it's the 0.386 level and the 0.286 level. I think it's 0.323 level, something like that. I'll confirm it later, guys. But essentially what you're doing is you're just having much, much smaller targets. So you're just looking for a 10 pip bounce to the upside, and you want to get in and get out. So in this situation, guys, what I would have done is I would have entered from the block. I would have put my stop below that structure low, so around 10 pips, and I would have been targeting that first TP level, okay, which is the 0.323 extension. Now you must be wondering, like, why are you going after such small targets? And the reason why, guys, is because this is a strategy for those of you that don't really have the psychology to stay in trades for a long period of time, and that don't really understand the higher time frame bias that well. Okay, and what it allows you to do is get in and out of trades extremely quickly, and your consistency on this will be extremely high once you know what you're framing on. All right, and for this to work best, guys, because I've actually back tested this literally quite a lot. I've done about a year's back testing on this on the 50-minute chart on Fiber. So I've back tested it right until I think it's 2017 August, right? And this strategy has around like a 90% win rate. And the reason for that is because you are literally just targeting inside of the range and you're not even worrying about above the range or outside of it, right? So guys, essentially what you'll be doing with this is you want to be getting in from the OTE area. And for me, this strategy works a lot better once you get a break in structure. So this would have been your break right there, right? And then you get a retracement into a block. Now, if you get this, guys, like this is just an OTE setup anyway. So it's the same setup you're looking for, a break in structure, and then on the OTE, you get in on the block, put your stop below that, make sure you get in on a block inside your OTE areas as well. However, the main difference with this, so is instead of targeting that high or the liquidity or whatever, or the range above, right, all you're really doing is targeting these extensions inside of that range already. And the reason why this works so well, guys, is because, like, usually in this situation, like if you're trading in line with order flow, you're always going to get a bounce from this block here. Even when you're trading on the counter end trade, you're always going to get some sort of bounce, right? And usually, guys, the bounce will be around 10 pips. So let's say you entered from that block and you targeted that level there. That's around 12 pips, right? As you can see, price literally TP'd that so quickly. Boom, bounce TP'd it. And then, boom, we also got price come to a second TP there. And then what did it do? It pulled back inside of the range. So this allows you to be profitable, guys, even when you're not getting, even when price hasn't taken out a structure high. So you can essentially trade price action inside of a given range and be profitable and not even have to worry about like whether price, what the order flow is, or et cetera, et cetera, et cetera. Obviously, this works so much better when you do know that, or when you are in line with the higher time frame order flow, because of course you're going to get much faster moves. But even if you trade against it, guys, I mean, look, let's just be real here. Like we all know this is going to go up and probably reach into that area right there, right? We all know that's going to happen. There's a very, very strong chance of it. Why? Because price has taken our structure low and it's retracing on that 4-hour chart anyway. So the 4-hour time frame would be bearish. However, we're getting a pullback. So essentially, guys, order flow is bullish on any time frame on the hourly or below. So price is going to be reaching for that high time frame target because it's retracing. So it just gives you a lot stronger reference, guys. However, let's say you weren't even trading that. Let's say you missed that entry, and instead you were like, oh, I wasn't even looking at the bullish side, you're looking at the bearish side. Let's say you sold, right? Let's say you just sold. Let's say you think you saw an OT entry on this side of the market. So price literally came down there, found a block, and you're trading, the OTE setup inside of that block, and you want to go short because you don't understand higher time frame order flow. If you entered from the sweet spot and you put your stop above, I'd always say the most obvious structure high. I mean, you could have put it above there, but let's say you put it above there, right? You still get your bounce. I mean, it's 8.5 pips is not much at all, guys, but price still bounces, right, to your first TP. It doesn't hit the second one, but it hits the first one, right? So you're still getting 8 pips out of that. If you had several positions on there, you're getting about almost around 20 pips or over 20 pips, right? So even when you're wrong, guys, you still get that bounce. And this is something I want you guys to check out and, backtest this strategy and really, really go for it, because it really does allow you to be profitable when you are wrong. And I know, guys, of course, there are still going to be times when you don't get that bounce and when price does literally just blow through your target level or your resistance or your structure highs and lows. However, guys, this strategy works 95% of the time. So even if you do lose, you're going to be right 90% of the time anyway. So you're still going to be profitable from this. And the frequency of trades you're going to get on this, even on one pair, guys, look, you got to set up today on one side of the market, and you could even have gone short on that side of the market also. So, guys, this is just something you can really use to cover your losses. Because let's say, guys, you went short there, and you had 3 positions on, and you were targeting 2 of them were targeting TP1, and 1 you were leaving as a runner to take out these lows, right? Or let's say you want to go short. Even when you were wrong, because look, price didn't find any, it didn't break through a low, it didn't go lower than a low, it's continued to go up. Even when you're wrong, you still can make money out of this setup. And I think that's extremely powerful for those of you that are just starting out, that want to just have something that's going to consistently give you pips each day, and that's going to give you a setup each day. And I guarantee you guys, you can get a setup almost every day on one pair with this strategy. Now, I know a lot of you are going to be like, I'm risking more than I'm gaining, right? So you're risking around 10 pips for I think in this instance it was a 12 pip bounce, so it's just over 1R. But yeah, a lot of the time, guys, you're not going to get good risk to reward on this. And I want you to realize this isn't for getting good risk to reward. It's just for being, just having something consistent that you can pull pips out of the market each day. And I would say in this situation, guys, you're not really focusing on R, you're purely focusing on pips, right? So I'll be looking for a 10 pip bounce usually. And the way that I would structure this is I would say, okay, I'm looking for a 10 pip bounce, and I want that 10 pip bounce to line up with your TP1, and for more added confluence, you want your TP1 to line up with a bearish block in this instance, or a bullish block in this instance right here. If let's say we're using that price leg, that's the bullish block that I would have used, and that lines up perfectly with TP1, right? So essentially all you're doing is you're just trading a bounce, guys, okay? That's more or less what it is. You're trading a bounce from one block to another block, but you're using the OTE setup, and you're using these 2 TP levels, which I'll show you in a bit, as your targets, okay? And this will give you a lot of steps, each day. Like today, guys, let's say I have a friend that actually took this trade today, and he had 3 positions on, right? So he took a long position on this when price came to here. On a sweet spot, he put his stop below there. So he had about 3 positions on, right? And he just bought from there, and he targeted his first TP only, because I would have given him, 10 pips, 12 pips, right? And that's all he needed. And he made about 30 pips from that trade, but he used a 3.3 lot size, right? So that's £33 or dollars per pip movement. So guys, I don't really have to do the math on that. 30 times 30, right? That's 900. So he made almost $1,000 today, just from this very, very small, very, very simple strategy that I'm sharing with you guys today. And this just shows you that you don't need to be the best. You don't need to be the most strategic or the most techie, at trading. You really, really don't need to be. You don't need to do that, guys, at all. You just need to be consistent, and you just need to find something that's going to consistently give you, right? Consistently give you pips, whether that be, the breaker strategies that I show you, or the OT strategies, or my intraday strategy, or on the higher times, whatever you use, guys, just make sure you're consistent with it. And I think this is something that you can really test out, because this works on the daily chart, on the 4 hour, on the weekly, because all it is, you're just targeting inside of the range. That's all you're doing, guys. You're not doing anything different. You're just targeting inside of the range, which is going to give you like a 100% more, 100% chance that price is going to reach inside of the range and outside of it. And because you know that price stays within inside of the range like 70% of the time, guys, like, your trade, your strategy is going to be, or your trades are going to be a lot more accurate and a lot more consistent using this kind of strategy. Okay, so all you're really doing, guys, you're just targeting price inside of the range. That's all it is. Like, instead of targeting lows and highs that price hasn't reached yet, you're just targeting price to come back inside of OT areas inside of the range. So, you're going to get a lot more higher success rate with that. So that is more or less the strategy, guys. Like, I know it's quite a lot to handle at the moment. I know I gave you quite a lot of information, but you can jump on a session with me if you really want to understand it a bit better. But essentially all you're doing is you're just trading a bounce in price, and you want to use, I'll show you the two levels you want to be using as well. So for the first TP, guys, you want to use the 0.382 level, right? And that is TP number 1, the most important one. And TP number 2 is 0.236. Now, when you're using that, because I know you guys are going to say, what TP level should I use, etc., 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 right? I would always say with this strategy, it's the most, this is the most conservative strategy that I actually have. And I would always say just target TP1 first, all right? Don't worry so much about number 2. I just had that as another, another target I can use. But you really want to just get the bounce, okay? All you're doing is trading a bounce, a 10-pip bounce, and you want to just get in and out with the strategy. That's all it is really for. So in this situation, guys, I would always probably use TP number 1. Now, this is why I say with this kind of strategy, you can actually have more than one position on. And I would actually say to have more than one position on, because depending on what you're doing, you want to kind of like milk it as much as you can. So because the bounce is so small, I would have like 2 positions on at least for this kind of trade, right? You want to have 2 positions on targeting that TP1. So that's what? A 10-pip bounce, 20-pip bounce if you have 2 positions on. And yeah, you want to just kind of like milk it, guys, as much as you can really. So target TP1, don't bother targeting structure highs or structure lows. You want to just trade a 10-pip bounce. And once you've got that, you just get on the market and you wait till the next day. And it's simple as that, guys, all right? So really go into your charts and back test this, don't just rely on like what I'm telling you. Like with everything, I want you to back test it and make sure that you understand it completely before you start using it live. Just because I've shown this to you guys and just because you now know it, don't think I'm saying, you just use it straight away. Back test this first so you understand how it works for you and you understand what the drawdown is for this as well, like what the stop placement should be, and so you understand all the metrics of it. Back test it first. And once you've done that, guys, I mean, it's a really good strategy you can use literally every day. There's more or less a setup on this every single day. And let's say we go into this as well. Let's say we talk about, let's say we just bring up the daily dividers real quick. That would have been your entry right there. You could have done it. You could have just used this price leg for a bounce too. I mean, this was in line with the order flow as well, guys. But let's say you weren't doing that and you got an entry from the sweet spot. Put your stop loss above the structure high, and you just targeted what? TP1, boom. Hit there straight away, and you even got like a little mini bounce there. And then what? TP2, boom, you're out. Obviously, you missed out that whole move, guys, and this is why I say to have more than one position on, so you can leave one to run and possibly take out these structure lows. And obviously, like if you're trading in line with order flow, guys, I would always say leave one runner on as well. So if you're trading a normal OTE setup, leave a runner on, because you want to leave the runner on to take out the structure lows, purely because if you know what the order flow is, guys, like you're more than likely to let price is more than likely to take out structure lows and structure highs above and below the market. However, if you're using this strategy just to counter trend trade, then just purely target TP1 and get out. Okay, so yeah, it's just a simple strategy you guys can use, and let me know what your success rate with it is. All right, see you in the next one, guys.